All right, got about 5 minutes to market open. Kind of watching some levels here. See how price reacts. This strategy I'm learning right now kind of centers around understanding that these gaps are formed right here when there's a shift in the market structure. So basically a swing low creates a new high, creates this gap, and then understanding how price then reacts to that gap. So as you can see, swing low, new high, bounce, swing low, new high, gap, bounce, bounce, and then again, swing low, new high, gap created. The gap is from the wick right here to this wick right here. There's nothing in between. This candle moved up with nothing else coming down in to test that price range. So it forms this gap. And here's a gap from the bottom of this wick to the top of this wick. And then a couple gaps here. And it did the same thing on this gap here. It came up, tested it, bounced, tested it again, bounced. So it's good for a couple bounces, but eventually obviously price comes back down once these orders are all filled, and then it'll drop through the gap. That gap just represents a area of unfilled orders because price moved up so strong, so fast through this price range that it leaves behind orders that were unfilled. So when it dips back into the gap, then these orders are filled, it creates buying pressure, and you get this bounce. So this is a strategy that's been released relatively recently by someone who used to be in the hedge fund management position, understands how algorithms move the market, and he's put out some really good information and tips. And there's another guy that's building upon that. He also has similar experience, and is explaining, giving these really high probability setups. So I'm just trying to practice that, look for these patterns, apply them. Got about 3 minutes to market open. And then I'm going to just trade the first few minutes like I did yesterday and see if I can have the same success. It's the most volatile time of the session. There's really a lot of movement back and forth, and I try to take advantage of all that movement by just pulling out a point here and there using heavy position. So with 15 contracts, if I get 1 point, that's $750. If I do that twice, that's $1,500, and I call it a day. So you can see price drops back into this box for the second time, and it rejects. Let's see if it bounces again. Came in pretty deep right here. But I wouldn't be surprised if it comes in lower and bounces again, because this is a pretty good sized box. And then the same can be expected down here. So if this works and you can use these to predict price action and movement, the possibilities are endless. This doesn't happen, every few minutes. This might happen a couple times in a day where it's this pronounced. This comes with really big movements in price. Usually it's a move up or down to grab buy side or sell side liquidity. And if you catch those movements, they call this the retirement setup, basically. There's enough points right here that if I'd have got in and known and been confident, this is tens of thousands of dollars right here. This is 2650, right? 2875, So that's 5 points right there. That's 5 points. That's $3,500. This bounce right here went for 28 to 36. 8 points, $6,000 approximately. And then another bounce, if I pulled it from here, 32 to 40, another 8, so 6, 8. Yeah, so you get the idea. $17,000 is in this from 7:30 to 8:15. So it's still rejecting strong out of the box. And that's a huge rejection. Whether or not it picks back up to the upside is hard to say. It's so close to, oh, it's actually market open right now. So let's see what it's going to do here. Bam. Okay, I just picked up $900. I was 100 and something in the hole. I'm at 726 right now. I'm going to wait just a second here. Once it gets, so normally, it's a lot of volatility. Yeah, that's what I was worried about right there. So it's turning around, it's going back and forth. Really strong move up. I think it's going to go up. I think it's going to keep going up. I think it's going to reach for that other low. But once it bounces back down one more time, I'm going to take it. See if I can catch it coming back up. All right. Up 1163 in less than 2 minutes. 1163, 2 minutes of trading. That's what you have to be careful of right there when it takes that big drop. So I should quit right now. I mean, I'm at the point where, my goal is 1,000. I'm not going to lie, I'm so tempted to just sit here and, do this for who knows how long. And eventually I probably will, but for right now I'm just trying to build my confidence, build my account. As I get more in the accounts, I'm more comfortable with, taking the risks, but I'm not at that point yet. Because with this size of position and this kind of volatility, it wouldn't be impossible to take like a $4,000 or $5,000 loss right here. I'm using a mental stop because there's so much movement right here that if I put a tight stop loss in right here, I would just get stopped out immediately and I'd lose $500 to $1,000 every time I tried it. So I have to give it room on both sides to play. Holy cow. So yeah, that's kind of my thought process. It's really taken off. This is sort of this is what I would call my base strategy right now, is trade this opening. Because I just found that the most opportunity for large swings is right here in this first few minutes. And to take advantage of that is a lot easier than trying to wait out for larger movements, slower movements later in the day. The goal is the more you need the stock market to move, the less your odds are of hitting your target. I'm only looking for a point. I set my take profit over here at 4 ticks, which is just 1 point over here. 1 point is all I need for $750 at this many contracts. And you can see how far it moves just in the first few minutes. It'll slow down quite a bit here shortly, and then for me to get that same 4 ticks takes longer. And there's more of a chance of reversals and ups and downs. But right here, The market really dropped yesterday, so it's trying to get some of that back. As you can see, if I go to a 5-minute chart, this is yesterday, it just pretty much tanked. So it was at an oversold area down here on this indicator, which generally indicates a bounce coming. You can tell right here, bounce, bounce. It's not perfect, but it's definitely usable. So this is probably going to go up here and take out these highs, and then turn around and head the other way, basically. This is kind of how you know it's algo driven. It's going up here, it's getting buy side liquidity right now from all the people who went short and set their stop losses up here. This is an obvious footprint of the algorithm. After that, it becomes less predictable and, you know, more buyer seller driven. But these huge moves like this, that's not the retail traders and, you know, people making that kind of price movement. That's banks and hedge funds operating on these algorithms that deliver the price in certain directions. I mean, they're trying to make money too. They have a plan and a strategy, and the people who are helping us understand that strategy are giving us tools to then recognize patterns in the market that we can capitalize from. So I'll be posting some information on that, some links and stuff. But I mean, having that kind of predictability is game changing. I'm just now starting to chart this, record these patterns, back test it. Going forward, when I see this and I can have confidence, I can go in with a heavy position instead of trying to get 4 ticks. I can try to get, you know, double, triple that, because I know that we're in an algo footprint and I can expect it to move a huge amount. And like I said, they call that the retirement setup. So it was at $17,000 up to here on this third bounce, and here's another bounce from the fair value gap is what that's called. This is just ridiculous, you know. And I'm so tempted to get back in right now, but at any second this could turn at this point. I mean, it's oversold or overbought now. So that same indicator that predicted the bounce is also telling me now we're getting close to a time when it's going to drop. And when it drops, it's going to drop hard. And I don't want to be in a trade with this kind of a heavy position with a mental stop loss. It could, you know, it could drive me, you know, $4 or $5 grand in a second. So trying to be smart. My best odds are in the first couple minutes. And I could, you know, go with a lesser position and still apply some different strategies to capitalize on this portion of the movement and this type of price action. Once you're a few minutes into the day, you're no longer in the opening, and you know you have to take a different approach. But I'm going to shut it down right here. I'm going to try to make these videos a little bit shorter and just capture the actual trade time, and you know, put out some information for anyone that's interested. I've had a little bit of feedback and a couple people asking questions about how to do more with this and how to see it started and stuff. So if you have anything like that and you want to know, I'm glad to help. Some people have helped me out, and you know, there's really a cool mindset among some of these traders about passing this stuff along and helping everybody, you know, make profit and get paid. So I want to do the same for others of what they're doing for me. All right, have a great day.